Well, it's a fledgling and innovative idea, a ranking of the Russell 1000 companies according to their justness. What's that? Well, according to Just Capital, it's not enough for companies to do well. They must also do good for their workers, for the public, and for the planet. The list of the most just companies of 2017 out today, and here are the top 5: Intel, Texas Instruments, Nvidia, Microsoft, and IBM coming out on top. Joining us with more, Martin Whittaker, Just Capital CEO, and previously at Sun Capital, which was an impact investing firm. Now, this survey, Martin, is fascinating. It's based on, 10,000 American respondents and more than 72,000 over the past 3 years.
Yeah, exactly. So we've put together a polling and survey platform that goes straight to Main Street America and asks them what their priorities are when it comes to corporate behavior. How do they define what just even means? That provides the framework for what we measure. And then the analyst team at Just Capital analyzes the largest 1,000 publicly traded companies.
I could hear some CEOs out there whispering, why should Main Street America get to decide how just my company is or not under my leadership?
I can't think of anybody better to decide who that should be or what just should mean. I mean, the truth is we need a more just marketplace if we're going to solve some of our major social, environmental, health challenges today. We believe in capitalism. We think that businesses can and should be a force for good. We think it absolutely is aligned with being more successful as a business. And one of the things we try to do is just be totally unbiased about how we're ranking companies.
So what are the questions you're asking? What are you prioritizing?
Well, we start with focus groups, with polling all around the country to get a representative point of view. And what that does is identify 7 major drivers of just behavior, if you will. The most important being how a company treats its workforce. But included in there are how a company treats its customers, its products, job creation, communities, the environment, and of course, making money for shareholders. Is
there evidence that these companies that are doing better on the just rankings serve shareholders better, make more profits and so on? Or is it purely just, being just for justness' sake?
No, absolutely. We launched a live index a year ago. It's 254 basis points north of the benchmark. We absolutely believe, not just in the portfolio level analysis, the case for justness and the case for outperformance, but also down at the micro level. We talk to companies all the time. We're very open and transparent with them. We see the connections between a company that treats its broadest stakeholders, not just shareholders, but including shareholders, treats its broadest stakeholders very well. They tend to do better over the long term.
Yeah, and of course, brand loyalty as well. They're ensuring customer loyalty if they have a great reputation for being fair, right? Is there anything that's changing under the Trump administration? This year, it's really the first year of the 100 that's being brought out with Forbes, but you have been looking at this for 3 years.
We have. I think one thing we've found that's consistent is that the relationship between a company and its workforce has always been the most important. The fact that a company can pay its workers, pay a living wage, is crucial. I think we've seen jobs rise in importance over the last year or so, and the strength of communities in the U.S. So I think that emphasis in our rankings has increased.
I want to read something that you wrote just recently. Doing your bit, pulling your weight, paying your fair share. In one sense, these are acts of moral responsibility. That's not to say we want to or should pay higher taxes. Rather, it's a recognition that there is a line in the sand beyond which behavior is simply not, well, just. America's corporate leaders may find that corporate tax reform presents them with yet another moral balancing act. Do we go backwards, like Robert Shiller suggests? Do we decide what level of taxation we need in order to ensure that inequality is not too, concentrated in this society? Or how do we do it?
Well, we're not saying that. We know from our polling that a company needs to pay its fair share of taxes, and we analyze company tax payments over a number of years on a very level playing field basis. The big question is, what does a company do around that issue? And in particular with the tax bill, what does a company do with the windfall cash infusion that it will gain from the tax bill potentially? So that sort of, we're saying that a company should prioritize other stakeholders. And in doing so, it will be more successful over the long term.
All right, and very briefly, the top 5 companies, all tech companies. Is there anything about that we need to know?
Well, they pay their people well. They have, they do well across all the things we measure. But I will say across our rankings, there are companies from all industries that do well.